All right, guys. So thanks again for watching Strengthen Realty Podcast. So this week we're talking about investment property purchases.
Yes.
So I thought it would be good for you guys that are interested, and maybe you already have a home, maybe you don't have a home, but you're thinking long term, want to get some wealth built in. So wanted to reach out to V. Thanks for coming in.
Hey guys.
To her office. She comes every day. And just want to talk to you and let you guys know what is needed to get an investment property. So that's what we're going to talk about now.
So as far as buying an investment property, whether you already own your primary or if you don't and you're just renting, there's not much of a difference. So some key factors to think about is with an investment property, you are required to do 20% down payment. Now, if you can swing 25% down payment, that'll be better because you're going to get a better interest rate. So just keep that in mind. You can save a little bit more.
20% would be more of a minimum type of thing.
Yes, that's correct. As far as credit score, around 680 would be the minimum, but if you can get around 720 or above, again, you're going to get a better interest rate, and there's going to be less discount points associated, so less closing costs. So just keep that in mind. If you can get your credit score up to 720, that'd be a lot better.
Okay, awesome.
Okay. And then as far as gift funds, so as a lot of you guys know, you can get gift funds with most other loans, like for your primary. With investment, though, you can't. It has to be your own funds. So make sure you save that money in your own bank account.
So that 20% needs to be in your account.
Yes.
For how long?
So we're going to look at 2 bank statements.
Okay.
Okay.
Awesome.
And then another really big key factor you have to remember is investment properties require reserves. So we're talking about 6 months of reserves, and that's your principal and interest plus taxes and insurance. 6 months worth.
Okay.
Right?
That's good to know.
Okay. And then another key thing to think about is your documentation. So documentation is very similar to purchasing any house. You got your pay stubs, W-2s, 1099s, tax returns, copy of your driver's license.
Yeah.
Now, if you already own your primary home or another home, we are also going to be asking for your most recent mortgage statement, your tax statement, insurance, and HOA. So those most recent statements as well. Just keep that in mind.
So keep all your receipts. Hopefully everything's filed if you already have, past investment properties. Cool. So, yeah, that's what I wanted to, talk to you guys about. So, remind us again, who's your mortgage?
Dash Mortgage, and I'm located right here at the Intero office on Kirby.
And online?
www.dashmortgage.com.
She didn't know there'd be hard questions today.
So hard.
So that's pretty much it, guys. Pretty simple. If you're looking to get an investment property now, good question. If they're looking for an investment property, does it matter the type of investment? Like, does it have to be a single family, townhome, duplex, and are there any limitations from different types of properties?
No, but there are limitations as far as if you want to flip. So if you want to flip, we can help you as far as who to point you towards. So those are going to be a different type of loan, like hard money loan.
Right.
But we can certainly talk about that in more detail. Just give me a shout out, guys.
Okay. Awesome. So yeah, I think this would be more for like you could say buy and hold.
Yeah.
Buy and hold, long-term investments,
Exactly. Like for either appreciation long-term or if you're wanting to rent out.
Gotcha. Okay. And are there any minimums and maximums on the amount that you can do? Like, say someone wants to say, I want to buy a fourplex. Now, obviously in Houston, that's going to be maybe like $450 plus. Is there any like minimums, maximums for investment?
So for these types of loans that I'm talking about here, it's going to be the conventional loans. So it's going to be those conventional guidelines. Exactly.
Okay. Very cool. So I think we will wrap it up there. Thanks for watching. This little thing in my hand is a microphone. So just if you're curious, if you're watching this, if you're listening to this on the podcast, thanks again for listening. This is V. This is George with Intero Real Estate, and we'll catch you on the next one.
Thanks, guys.